BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top trade. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi.
Good morning, everybody. Live stream tonight. If you want to join the Patreon, there's a link in the description below. Other than that, let's get stuck straight in. We're going to look at Bitcoin, Ethereum as an overview, Total 2, and the Nasdaq, which we'll start with right now. So Nasdaq and S&P futures all having a bit of a red week, really. If you think about the size of this red candle from wick to wick so far, it's a 5% move. I mean, that is not the biggest thing you've ever seen in the world. Obviously, you know, we're talking about indices, stocks, for the most part, they don't move massively. If we were to move down to the bottom of this this range, being the 20 weekly or the 21 exponential, it's a maximum move of about 8 to 9%, really. So, you know, we could make the case that we're already halfway through it if that were to continue. And if it continues over the space of a couple of weeks, we're probably less than halfway, more than halfway through it, because these are uptrending movers and averages. And with uptrending moving averages each week, they will close a little higher, so the supports will get higher each week. Looking at this on the daily, though, we've lost the Bollinger Band a couple of days ago, so we're moving down towards this 50 exponential. We don't normally catch much of a break on the 50, to be honest with you. It's not really a thing for the Nasdaq. The main one would be to focus on being the 200 exponential, which is actually sitting, you know, quite significantly lower than we would like it to be. And if we were to see this move down immediately, we're talking another 10 towards 11% move, and that's if it were to do it now, because obviously we're looking at a trend like such, you know, and you know, just as I explained with the weekly, the daily is going to be the same. This could retest it down here, 8%, maybe 5% over the next, well, couple of months, really. Who knows? I'm not looking at this as a major breakdown. I don't really see any other reason for it to be a major breakdown on its own chart, unless there's some strange things going on that we don't know about. You know, let's just face it, the world is a strange place these days. I'm growing more and more skeptical. I feel like I need to, and sometimes I actually feel like I need to just book myself into a psychiatric unit because I can't believe the world around me sometimes. It's just crazy. I don't mean that in a literal sense. I just mean look at the TV. What the hell's going on? And so nothing should surprise any of us, to be honest with you. Maybe I should just turn the telly off, to be honest with you, and just focus on the charts. But even that is a bad call. You kind of have to expect the unexpected these days, because the unexpected seems to happen all the time. So anyway, let's focus on what we're looking at here. Realistically, yeah, the 10 exponential offers an area for a bounce, as it did here and here. So that is coming down just a tiny little fraction below where we are right now, 19,500. S&P, same deal, really. So, you know, we've got further to fall, but still, it's still a baby step, really. So if you're thinking about the pullback, yeah, we've got another, well, we'll call it 2% to come down to the 10 exponential. We've got another 5% to come down to the 20 weekly. So it's just the same as the S&P. And look, last time we saw a big move into it, catapulted right back up. We do have bearish divergence on money flow index and on the RSI, so it wouldn't surprise me to see a bigger move like that. Maybe, you know, at best below 5,000. All this is nothing more than opportunity, in my opinion, unless the world has decided to descend into pure chaos. And I don't know about you, but I'm from Leeds. I don't know if you looked at Twitter or anything. Leeds went mental last night, and I don't put much past Leeds, to be honest with you. People don't really understand it for what it's worth. Leeds is a lovely city, and it's got some horrendous suburbs. And to watch what happened last night, I mean, oh my God, what's going on in the world? Anyway, I digress. The world is chaotic anyway, but yeah, Leeds last night was mental. Sort of glad I don't live there anymore. Right, let's get on to Bitcoin, which is what it's all supposed to be about. I'm not talking about local news. Remind you that what happened last night probably isn't local news. That was a big deal. So I imagine much of the Western world will be watching that chaos that took place last night. Let's have a look at Bitcoin. So Bitcoin's looking all right, to be honest with you. The pullback was minuscule so far, and actually we didn't even touch the 7 simple moving average, which is actually pretty bullish. Maybe a little too bullish, to be honest. You'd love to see. I always want to see a retest of a moving average, as we did on this 50 here. So the daily, as of this moment in time, based on this price to moving averages, is bullish. There is no bearish divergence signals on this. It has most likely been pulled back by the weakness in traditional markets and indices and stocks, and just through association there has been a sell-off. The correlation was zero really throughout this pullback on Bitcoin and crypto over the last couple of months. Bitcoin, crypto came down, stocks went up. The correlation didn't really exist. If anything, there was a correlation perhaps maybe with gold, which was consolidating as well in its own right, which basically broke out before Bitcoin. So Bitcoin doesn't really know who it wants to partner up with. Maybe it should just do its own thing like it's supposed to. Based on the 4 hourly though, we have found ourselves move up to the center of the Bollinger Band now. So a rejection from here would not be unreasonable. And the major opportunity would be if we were to pull back further. There's a golden cross on exponentials, which is another 3.89%. Further down from where we are right now to the 200 exponential. 200 simple is 4.5%. This would be awesome. So most people will probably look at that and go, oh my God, it's over. Sell, sell, sell. And look, there's nothing wrong with being protective. Remember, I'm still 50% in cash. I'm not 100% in anything. I've built up a portfolio slowly, and I've been doing some appropriate trading. But I am not like saying we're moving into a parabolic alt season or anything like that. No, I'm far from it. I'm saying I'm prepared to wait for a parabolic alt season, which is why I want to build up portfolios at these levels, or the levels that we were seeing, over the last month really. Right now, a pullback down to this area would be bullish if we could bounce from here, because this is a golden cross. This is also a golden cross. This is basically areas where a V-shaped recovery can take place. So that if it was to happen like it normally does, you'd be looking for a 7% move. Yeah, I know it's only 7%. Go back to sleep, noob master. But that's what that says. Now, with this move, I think we have consolidated enough. We don't have any bullish diversions. We haven't been consolidated long enough to get that kind of thing. So we're going to start hunting for more appropriate signals on other time frames. At the moment, the intermediate time frame being the 12 hourly hasn't got anything particularly going for it outside of being above moving averages, like the daily and sort of, I suppose, the 4 hour to an extent. What you want to see for a big bull move, and this would be a big one, perhaps maybe even to a new all-time high, would be given to us on the 12 hourly. And it's the old itchy cloud, really, is what we're looking for. So we've got the green portion here, leading portion of the cloud. We've got a conversion baseline cross down here. Obviously, the price is outside of the cloud. So we are just waiting for this little Chiku span to close outside of the price action. And the cloud is going to be at this level for how many days now? Another week to 9 days. So this flat level of the cloud is also at the major area of resistance. The big box of significance is what I like to call it. Which, we're talking about price. We're talking 65,500. On a 12 hourly, you want to see a closure above 65,500 over, well, I suppose any point over the next 7, 8, 9 days. And you will likely see a pump signal generate and then kick in. If it kicks in, the next big move would take you up to the 71,500 zone, and from there probably see a rejection, but we will see, because once that's broken, new all-time highs, and we're looking to push up closer to $77,000, $78,000. But right now, we're not there. We don't have the signal, but we are keeping our eyes on the chart, waiting for the signal. This is something, I suppose, my channel, if ever I'm trying to show you something, I'm not just saying, oh, this is definitely going to happen. I'm saying, look, if you want to focus on a chart that might generate a pump signal or a dump signal, or basically it's not doing anything, you've got to keep your eyes on it. This is what traders do. They don't just wake up in the morning and go, I'm going to trade this regardless. I've woken up. It's 25 to 8. I've got to trade, man. No. I always use the analogy of fishing. Trading is like fishing. You sit at the side of the lake and you put your bait on the hook and you wait. You don't control the fish, all right? The fish do what they want. They might bite, they might not. It's just time now at this point now. You've got the bait, you've got the hook, you've got everything you need. All you need is to wait for the fish to bite. And that's basically what trading is. You've got to wait. You're in control of certain aspects of it, that you're not in control of the actual price action and the signals. They will only come to you. You can't force them. They will only come to you. So that's what you got to wait for. This is a 12 hourly now, and a 12 hourly is offering something, but it's not confirmed. Once it's confirmed, it's worth taking the opportunity, I would say. If you're looking to rush, you know, and throw a grenade in the lake, perhaps, maybe, as another analogy, and see what floats up after that. It would be a retest of these areas down here. You could get in as early as 62,200 or as low as 61,500, which would be awesome because that corresponds to the weekly 21 exponential moving average, which for me is the line in the sand, really. That's where you could, like I say, throw a grenade in the lake and take a, well, what do you call it? It's catching a knife, to be honest with you, but at least the knife would be caught with some kind of protective glove. My analogies are on fire today, my God. So, you know, if we come down first, then this would be that would be the trade. If we continue to go up and we get a closure of the cheeky span outside of the price, outside of the cloud, then that's also a signal. So there's signals from lower areas, there's signals from higher areas, and there's a setup in both directions for continuation up. Invalidation would be closures below 61,400. And that would be it, and you'll be looking for it to come down further. For me, I'll be looking for it to basically come down to 60,000 flat, really, which is where your Bollinger Band center is, and maybe even the horizontal back down here towards 59,000. But right now, it does look like it wants to claw itself back up and make an attempt to close higher, which is good for us because we want to see it close higher and get that pump signal. What's good for Bitcoin is probably going to be good for altcoins, but as I've been saying, you know, I've avoided using the word alt season this entire time. I've been calling for an alt rally, and this is what we have got. We've got the alt rallies, mostly into death cross, which means that this is why we were expecting a pullback from these areas, and we got that. Doesn't mean that you can't build a trend on a daily, but you know, the most part of that move was predicted, and we received it, and we're grateful for it, and we're out of it, unless of course you're hodling, and that's a different story altogether. You're about time in the market, not timing the market, time in the market. The dominance chart is still positioned to move up further and higher, which again is definitely more in favor of holding a Bitcoin position. The total 2 got a rejection on the 20 weekly again, which is fine because this has been a big move from a golden cross retest to the Bollinger Band. So we're looking at general recovery over time, breakout, continuation. It's a bullish chart, but rejection, resistance around this area because that is more likely. Remember, 65% more likely to stay within this portion of the band than to break out. It's not 100%, it's 65%. So there is a chance that we could break out, but the chance is in favor of a rejection, which is why we've received a rejection, because that's most likely, and that's what we've got. It will break one day. On the first attempt, not so much. So good luck with whatever it is that you want to do. All right, it's your choice how you're going to go about trading these markets. They're very tradable markets, and actually they do point to actually continuing to go up anyway, generally over a longer period of time. In the shorter period of time, I still think that there's a good opportunity to see us return back to 65,000, and it will allow for alts to move with Bitcoin. But it's a Bitcoin-driven market. Bitcoin's going to remain dominant until further notice. The main area for when I will call for alt season, I'll start using the word, will be at 58% dominance, and if we break through that, absolutely at 63.5% dominance. That's where alt seasons will likely take place, and this is why building a portfolio when the tether pairs are low is good. You know that Bitcoin's dominant. You know that that Bitcoin's likely to outperform, and altcoins could get seriously hurt in further pullbacks. But over time, I think that this is an appropriate place to have started to build a portfolio. Because if and when we get to these areas, let's just say we manage to break up all the way up here, and it's going to be painful for alts until we see that, the size of the pullback could easily take us all the way back down. There'll be a 37% move back all the way down to this rough level of support. And that would be incredible for alts. That's where things go parabolic, and this is what I'm projecting anyway. This is the sort of thing that I'd be looking for. This into this, generally speaking. I'm not saying that we're going to be hitting any particular area. I'm just saying time-wise, we have been saying, or we, the operative, you know, the royal we, I mean me, that we're going to be accumulating throughout the summer, throughout a pullback consolidation, and then at some point next year, we will start to see some bigger moves, peaking most likely around September next year. Right, so that is basically it. So long story short, we've got setups and signals on Bitcoin from higher and from lower areas. It's definitely a tradable range. Some altcoins positioned better than others. That's what the Patreon's for. So I'll see you tonight, and we'll go through all of those. And other than that, I hope you have a nice day. Take it easy.